This week's gold, silver, and platinum specials for Miles Franklin are pre-65 dimes and quarters, only 99 cents over spot. We also have 1 ounce silver Pamp Swiss rounds for only $2.59 over spot, 10th ounce gold maples, $45 over melt, and 1 ounce platinum platypus coins for only $119 over spot. If you wanted that or anything else that we have to offer, we have a huge variety, weekly specials. Send an email to info@milesfranklin.com. Let them know Slayer sent you. When you send an email, it helps me out. Andy Scheckman is the CEO of this company, so you know we're legit. We're the most respected around with the best prices. You can trust us, and we are here to help you. With that said, let's jump into the video. Also, folks, if you want a chance to win some silver for free, go check out my second channel called Down the Rabbit Hole and go comment on the first official video I posted over there talking about Project MK Ultra. If you leave a comment on that video, you're automatically entered in the giveaway because I'm going to be doing a random YouTube comment picker on that video. So go leave a comment over there. May the luckiest stacker win. Now, folks, check this out. This is going to be a treat. I skimmed through probably 10 to 20 different articles talking about silver every single day. I've been doing this for around 10 years, but rarely do I find an article like this that is as thorough as it is, talking about what silver's doing, why it's doing it, where it's headed, and why it's headed there, and giving so many different points. It is honestly impressive. Just to skim through a little bit of this, just so you get some context of what I'm talking about, check how thorough this article is. It's talking about how macro factors are boosting silver prices in 2025. Most people look at the micro, they don't look at the macro. But check this out. They go over economic indicators shaping silver's performance, then they go into monetary policy developments, the market reality, how does the futures spot price relationship impact silver markets? That's when a lot of people ask. Manufacturer pricing strategies, then they go into global silver export markets, international silver trading conditions, global supply chain considerations, then we go into consumption affecting silver's market dynamics, current consumption patterns, industrial demand. Then they go into technical factors influencing the price of silver, chart patterns. Then they go into market sentiment, then investment flows, go into investment demand trends, comparative investment analysis, the outlook for silver prices in the coming months, short term, long term. I mean, they go in, there's so much. And then the current disconnect between silver prices and physical demand. Go into U.S. employment data, market significance with spot future silver. I mean, there's so much going into data on each of these exchanges like the Shanghai. It is very impressive. Now, send this video to someone who might not understand why you stack silver. And by the end of the video, if they watch it all the way through with an open mind, they should get it, right? This is just one of those articles that hands down just breaks everything. It really does explain why we stack silver, or why we say that silver has more potential than anything else. So anyways, enough with that. Let's just jump into this article. I will link it in the description. How macro factors are boosting silver prices in 2025. What are key macro factors influencing silver prices in 2025? The silver market is currently experiencing a significant shift driven by macroeconomic developments that have created a distinctive pricing environment. According to the latest data from Shanghai Metals Market, several critical indicators are shaping the precious metals trajectory. Economic indicators shaping silver's performance. The U.S. employment landscape has taken a notable turn, with the ADP employment report revealing that private sector employment declined in June of 25, marking the first drop in over 2 years. This unexpected weakening in the labor market has immediately influenced market sentiment regarding Federal Reserve policy. Quote, this surprising employment contraction has significantly altered market expectations regarding the Fed's rate decision timeline, notes SMM's July 25 market analysis. Quote, probability of a September rate cut has increased substantially following this data release. The relationship between employment figures and silver pricing follows a clear mechanism. Weaker labor market or weaker labor data increases expectations for dovish Fed policy, which reduces the opportunity cost of holding non-yielding assets like precious metals, thereby boosting demand. The dollar strength has historically maintained an inverse correlation with silver prices. When the greenback weakens, as often happens when rate cut expectations rise, silver typically benefits as it becomes more affordable for holders of other currencies. This relationship is one of the key macro factors boosting silver prices during periods of economic uncertainty. Then you have monetary policy developments. The Federal Reserve policy remains the dominant force in the precious metals landscape. The aforementioned employment data has accelerated expectations for a September 25 rate cut, creating a supportive environment for silver despite physical demand challenges. The current interest rate environment across major economies continues to evolve, with diverging paths between central banks creating an arbitrage opportunity of influencing capital flows toward precious metals markets. These dynamics are particularly important for the silver market squeeze analysis that many investors are closely following. Then you have this market reality. The combination of softening employment data and growing rate cut expectations has created a floor for silver prices even as physical demand remains subdued, demonstrating the power of macroeconomic factors over consumption patterns in the short term. While many investors focus solely on the Federal Reserve, like I was mentioning, just the micro, it's worth noting that central bank precious metal purchasing patterns have shifted dramatically in recent years. Several emerging market central banks have increased their silver holdings alongside gold as part of broader reserve diversification strategies. Now, why would central banks, be hoarding silver especially since silver is not a tier 1 asset like gold? Silver is not even seen as real money. Then why would banks be holding it? Gold makes sense. But why silver? How does the future spot price relationship impact silver markets? The relationship between futures and spot prices provides critical insight into market expectations and physical demand conditions. Recent data reveals important shifts in this dynamic. Current spot futures price spread analysis. According to SMM's July 25 market report, silver market is experiencing a notable narrowing of the spot futures price differential. The convergence carries significant implications for traders and industrial users alike. Warrant suppliers in Shanghai have reduced trading day premiums by 1/2 of a yuan, signaling weakening physical demand. And more dramatically, some suppliers have begun offering discounts of 36 won against the Shanghai silver 2510 futures contracts. The widening future discounts, particularly 36 figure against the Shanghai exchange's 2,510 contracts, indicate stronger futures prices relative to spot, potentially signaling a shift toward contango in the market structure. This type of price curve typically suggests adequate or even excessive near-term supply. Now, something that's interesting with the Shanghai is that they have to, well, let's say they want to own a contract, like on the COMEX. They have to actually turn in that gold or silver to the exchange if they want a paper contract. The COMEX doesn't do that, and that's why the COMEX can suppress or manipulate the price of silver, because there's way more paper contracts than there is physical metal, even though it's portrayed as a 1-to-1 ratio, where the Shanghai doesn't do that. So anyways, this is a very, very long article, so let's just highlight some of the main points. So what's happening in global silver export markets? International silver trading conditions provide a broader perspective on global supply-demand dynamics that complements domestic market insight. So we have negative premiums. Effective discounts strongly indicate oversupply or weak international demand. I mean, of course, right? If demand's booming, you're going to see premiums increase. But this usually signals their urgency to clear inventory despite unfavorable pricing. So, global supply chain considerations, international shipping costs significantly impact silver pricing. A lot of people don't think about this, with freight rates creating effective barriers between regional markets. The regulatory landscape for precious metals continues to evolve, with several jurisdictions implementing stricter reporting requirements and verification procedures for large silver transactions. That's definitely, tell that to the U.S. military. These regulatory changes can create temporary market inefficiencies as participants adjust to new compliance frameworks. I mean, and not temporary. I mean, very okay. It might be temporary to some degree, depending on what what exchange or what sector who was doing it, but it's a lot bigger than I guess not only the price, but what mainstream media realizes. With the Silver Institute coming out with these numbers that every single source across the board goes by, most people don't even know that the Silver Institute's not incorporating military or aerospace, and those sectors alone are bigger than EVs and solar combined. So with these supply and demand fundamentals or production or looking at the deficits, these people have no idea that it's actually much greater than that. Much greater than that. Much larger than that. Currency fluctuations add another layer of complexity to international silver trade. So they go into consumption patterns, industrial demand analysis. Electronic sector represents 25% of silver demand, right? And that's not true. They're not incorporating aerospace or military. Military stopped reporting their silver holdings in 1995 and the DoD in 2002. So, with circuit boards, semiconductors, and other components requiring silver's unique conductivity properties, recent electronic manufacturing PMI data suggests moderating growth in this segment. You have medical and pharmaceutical applications. So, what technical factors are influencing silver price movements? This provides valuable insight into market sentiment, positioning, and potential price trajectories based on historical patterns and trade behavior. So, silver's price structure reveals several key support and resistance levels that traders are monitoring closely. $30 level has emerged as significant psychological resistance, while support is formed around previous consolidation zones near 27. Now silver is sitting up at $36, $37 already, so $40 is much more likely before we're going to see any type of support level near $27. Multiple technical indicators suggest silver may be approaching overbought territory daily time frames, and if that's true, we might see a small pullback because overbought territory means it has to correct back downwards. So they go into investment demand, which has been up this year tremendously, while maybe the industrial sector lacked a little bit, investment sector picked up. We have other countries that are focusing on silver, like Russia now focusing on silver, which has never been before. India the last couple of years. So what's the outlook for silver prices in the coming months? So short-term price projections, technical analysis suggests silver may experience consolidation in the immediate term. Potential resistance at recent highs support the 50-day moving average. Any significant breakout above resistance could target the $35 level, which it's already above. And this was written 2 days ago, so silver was already above this. But long term, let's see what they're talking about long term. Mining production forecasts suggest constraints in supply growth. So, industrial demand projections remain robust, particularly from solar panel manufacturing. Are they going to say an actual price, though? It looks like they are not. So, yeah, they're not throwing any actual prices out. But if it breaks through 40, then 50 soon after, and it breaks through 50, then 100 is soon after. So they go into labor market weakness is reduced economic growth expectations, growth concerns, Federal Reserve dovishness, anticipated rate cuts, lower real yields. 4, reduced opportunity costs, increased precious metals appeal. So yeah, there's a lot. There is a lot here. Silver market data summary. The Shanghai TD premium, it's declining, indicates weakening physical demand. So there's a lot of in there. Further exploration, macro-driven investment flows and physical market fundamentals creates a fascinating case study in silver market dynamics. This dichotomy highlights the importance of monitoring both monetary policy developments and industrial consumption patterns. And that's what I do, right? I don't just look at one or the other. I try to look at everything as a whole, and you get a pretty good idea, honestly. But most people are only looking at the micro, looking at interest rate cuts and looking at that direction of things, looking at gold or the gold to silver ratio, which is great, but there's much more going on behind the scenes. So, anyways, yeah, I thought this is a very, very thorough article that explained a lot. We could go, they didn't even go into the conspiracy stuff, really. I can't even call it a conspiracy at this point because it's just the truth, like JP Morgan price manipulation through spoofing or the COMEX price corruption or any of that side of things as well. But at the end of the day, this is a very well written article, and I hope you enjoyed. If you did, make sure to like the video, make sure to subscribe, leave a comment down below what you think silver is going to do by the end of the year. You think it's going to hit 40 before it goes back down to 30? Do you think 50's in the cards before the end of the year? What do you think? Let me know in the comment section below. This is Silver Slayer. Thanks for tuning in. I will see you guys tomorrow. Peace.